Our next guest is pretty downbeat, not just about the U.S., but the whole world. James Shugg is senior economist at Westpac Banking. He's based in London, but joins us from Sydney today. Great to have you on the programme, James. Why so downbeat? The U.S. data of late has been very good.
Well, Lindsay, it's great to be here. Look, we are downbeat on the US economy. We think the headwinds confronting the economy remain persistent and, in fact, overwhelming. I mean, the fact that we've got 0% interest rates, effectively, quantitative easing going on and probably another round to come, yet the economy can barely grow at a 2% annualised pace, at best, I think indicates just how unhealthy the economy is. The fact that housing is not participating in the recovery is making it very difficult for this recovery to actually sustain itself.
Some say, though, that housing is stabilised.
Well, if you look at new home sales, housing starts, home prices, they're all somewhere between 10 and 25% below where they were when the economic recovery began nearly 2.5 years ago. Housing is still going backwards. The consumer spending that normally would be related to the housing market recovering is simply not there. And in fact, the Commerce Department's models that they use to estimate economic growth are actually biasing the published growth numbers upwards. When we get more reliable source data in July next year, we're probably going to see downward revisions to the pretty meagre growth numbers we've seen for this year already, just like we did in July of this year related to the previous year. So I think that the US economy is still pretty close to recession, even though there's some optimism about the last month or so's apparently better-looking numbers.
So what's got to happen to pull the housing market out of the doldrums? Doldrums probably being too mild a word when many Americans own more than their homes are worth. What's it going to take?
Well, the supply, the oversupply, the glut of housing needs to be reduced. Now, the American policymakers, of course, have lost the ability to actually make decisions, which is not helpful. But I think one policy that would help would be giving free green cards to wealthy families in places like Greece, Italy, Portugal, maybe China as well, on the proviso that they buy a foreclosed home in the US. So you get these wealthy families coming in, helping to support the housing market, spending money in the economy. I mean, immigration made America great. Of course, the problem is, politically, that sort of solution is going to would be difficult to implement. But it wouldn't cost the federal government anything. So that's the sort of policy that I'd love to see for the US, but I think it's probably a vain hope.
Yeah, one I haven't heard before. Very interesting, but difficult, as you say, politically, especially when they're trying to control the southern border. You mentioned eking out 2% growth in the US being not so good, but Europe would be happy with that, wouldn't they?
Well, look, Europe is on the edge of catastrophe in 2012. I don't think there's any doubt about that. Even if the European Central Bank in the next few months decides that it can put in place an unsterilised bond purchase program to help push down bond yields so that European governments have the opportunity to keep funding themselves while they put in place hugely devastating in terms of economic impact microeconomic reforms, austerity measures that are necessary to make those economies more efficient, more competitive, and to help restore some confidence in the ability of those governments to finance themselves. Even if that were to happen, you would still see a very deep downturn in Europe in 2012. We've currently forecast a recession of about minus 0.6% in terms of GDP in 2012. The risks to that number are very much to the downside now, and the risk of a more serious catastrophe in Europe in next year or the year after, I think, is still very high. Yes, so you're right. I mean, US has got problems, but the problems in Europe are certainly much more severe.
And you use the word catastrophic when it comes to Europe. What's the best way that this situation can play out now? I mean, is this the European government and the ECB bond buying kind of buying time until they can integrate fiscally?
Well, look, that's right. So the fundamental problem in Europe is not debt levels. It's the fact that the economies other than Germany have become relatively inefficient and uncompetitive. Now, normally, an uncompetitive economy is the exchange rate would fall to help lower costs and make them more competitive. That cannot happen in Europe. So these economies need to put in place measures that will make them more competitive. The 35-hour week in France, it has to go. very generous pension arrangements in Italy and Greece. They have to go. I could run through a very, very long list. The problem is implementing those measures slows your economy down in the short to medium term at a time when there's austerity measures designed to pull budget deficits down, at a time when the economy is going into recession anyway, at a time when the global economy is looking pretty soft as well. That set of circumstances combined is going to give financial markets the real jitters in terms of the ability of many European governments to keep funding themselves. That's why the ECB needs to step in to give these governments time to put in place these hugely devastating measures, which will be necessary for the longer term. The ECB can do it, I think, on the basis of warding off deflation. Their inflation mandate is inflation of close to but below 2%. The risk is it's going to be below zero heading into 2013 if they don't do something substantial soon, because believe me, the European downturn is really keeping me awake at night. For the first time in 25 years as an economist, I'm actually having difficulty sleeping because of my concerns about what's happening in Europe and the human devastation it's going to cause.
I believe you. It sounds like you're saying that the worst of the economic pain, James, still lies ahead for Europe. Thanks very much for being with us today. James Shugg, Senior Economist at Westpac Banking Group, joining us from Sydney.